Next trade is Under Armour. And this is a very interesting trade. It's in line with our discussions on effort versus result. So I'm going to show you in the downtrend all of those spots where it seems that on the increased effort, the price is not fulfilling the intention, the objective of that, of the effort behind it, of the intention behind it, and the subsequent collapse. So also this trade is interesting because during this period of time, as you know, and this was 2017, the market is definitely in the long-term, intermediate, and short-term changes, but all of the biases are to the upside. So we are basically taking a trade here opposite to the market environment. And this is a little bit more of the advanced technique that I'm gonna discuss here in this trade. I don't necessarily would recommend this to the beginners or the intermediate students. But for those of you who feel comfortable with structural definition, with the effort and the result definition, with understanding what kind of trades opposite to the major market environment you can take, those more advanced students definitely could produce a trade like this. So we are in the long-term bias to the downside, both on the stock side and on the industry group side. We just experienced a very prolonged redistribution range. And in this distribution range, we are seeing a very clear two instances where the effort is increasing. And we see that from the volume signature, there are quite a few increases right here. And yet the result is not there. The result is diminishing. The intention behind this move was the gap and with the further extension of the price, advance of the price to the resistance, was to overcome this resistance and to commit above it. And yet, what do? We increase the level of supply, and that suggests some kind of reaction, stop in action, change of character, reversal, and that's exactly what happens after that. The second point that has the same type of the characteristic is the next upthrust action, which happens in phase C. Now, this is a terminal upthrust that defines this trading range. This is the highest point in the trading range, and that defines the highest point also for the next move to the downside. And we see the increase of effort, not necessarily as much as we've seen before, and that pushes the price a little bit higher, but we have kind of the same fade-in momentum to the downside that we were having in the first case. And first it's very slow, but then momentum increases to the downside and suggests that this was just a temporary commitment above and almost instant return into the range. So the same type of analogs, upthrust analogs that we're experiencing. So effort increase, smaller result, and that's how we would judge the failure. And usually a failed signal is going to be the most favorable signal that we're going to see. The same type of action is somewhat here. This is a smaller version of the same phenomenon where effort is increasing, and look at the analog at kind of the same signature here on the volume, and yet the upthrust has even weaker qualities to it, so we're expecting a much better reaction to the downside than the initial move of this upthrust right here, but acts on the same principle. Increased effort, no result, means that short term we're going to be bearish. Then the most recent redistribution on the way down has a lot of great characteristics for the continuation of this down move. Well, first of all, long term, we are close to the resistance, and look what has happened before. Every time we touch this resistance, there is some kind of significant move to the downside. So our expectation is that we're going to have that move. We also thinking that as we're touching the resistance, we're probably going into more of the conclusion of this downtrend, and that could accelerate the movement to the downside. So that's also very exciting. The earnings day is upon us as we're looking at this bar right here for the point of entry. And obviously, this is a short position. This is not a long position. And then during the range, and you can go through the labeling here yourself, specifically in phase C, we have again the situation where effort is increasing. And again, it's somewhat close to the previous analogs. And yet, what is the result? Our intention was to overcome the point of resistance and commit above, stay above there, produce some kind of shallow backing up action on contracting supply, and yet we don't have it. So again, we are repeating the same type of scenario that we have seen prior in all of the upthrust attempts, and it just repeats over and over and over again. And then before we actually go into the earnings day, look at how after the failed upthrust attempt, which becomes a last point of supply, we quickly go to the level of the support and we can't really rally. There is really no strength to rally to the upside. And the last bar on the attempt to rally has the same characteristics of, again, increase in effort and decrease of the result. We definitely want to overcome at least even the short-term resistance that we have here, and we are unable to do that. So that suggests bearish bias. That suggests that the earnings is going to be unfavorable, or at least the sentiment to the earnings is going to be unfavorable, and we're going to see lower prices. We're going to see some gap in action and so on and so forth. Our target is all about the long-term support line. This is where the price has found the support multiple times, and with the idea that the character is going to improve in the move to the downside, and it's going to accelerate, and we're going to see some kind of capitulation on earnings like we've done before. We've seen before here, here. We are expecting kind of the same type of gap down, quick move to the downside type of action. Let's look on the intraday, because this was a really quick trade. This was not necessarily a position that I held, for a long time. There was no intention there to hold on to this position for a long time, because I'm trading counter to the market environment, which is up, and I'm trying to catch a really quick move based on my understanding what kind of character of the move it's going to be. So on the day of the actual opening of this position, there is the first initial move to the upside, and we can't really commit above the levels of the resistance. So I'm opening the position right here. By the close, there is one attempt, but a really quick back move into the trading range. And the next day on the open, obviously, a very favorable open on earnings. The sentiment was bearish. The reaction was bearish. And I'm closing the position partially in this area right here, and then by the end of the day at the close. So one of the things here that again kind of catches my eye, it's all about the exit for me personally. I think that the selection tactics, initial trade management is all okay. I would prefer to stay in this position, obviously in hindsight, a little bit longer, and to exit on either a change of character bar right here on the confirmation of the change of character and the reversal. And you could definitely do this. You would have to go into the next day or next 2 or 3 days, and I had weekly options. So my goal was, to hit and run, just come in really quickly, get some quick profits on the weekly options, and just go away. So actually, the weekly options played out nicely. And I believe that the price, when the price went down, the price of option actually increased to about 30 plus cents. So that would have been even a better trade. So again, something to consider, something to think about.